Hello and welcome. You're watching Business Today TV. I'm Sakshi, Batra, and this is the special edition of Market Today, where we will keep our focus on the earnings. The first key earnings of Q3 have come in now. TCS, the leading IT major, the most valued IT firm which is listed on the stock exchanges, has reported its Q3 earnings, where the profits have risen by 4% on a sequential basis, albeit they have missed the estimate slightly. It has come in at 10,846 crore rupees. On the other hand, when you talk about the revenues, they have in fact surprised the street, about 5.3% sequential rise in the consolidated revenue front at this point in time, 58,229 crore rupees. That's the figure for revenues right here. Sequential rise when you talk about the dollar revenues that have come in at $7,075 million right there. The consolidated EBIT that has come in, up 7.6% on a Q-on-Q basis at 14,284 crore rupees as well. Also, in constant currency terms, we've seen that the revenue has grown by 13.5% year-on-year during the quarter. Also, the EBIT margins have come in at 24.5%, and that's up by about 50 basis points on a sequential basis. However, when you talk about the order book, that's come in at $7.8 billion. That's lower than the $8.1 billion that was seen in the previous quarter as well. Talk about the net headcount attrition. That has also declined, and this is for the first time since COVID as well. Attrition, however, on the other hand, has come in at 21.3%. That has also come down for the first time in 6 quarters too. Now, what do the earnings really, share with us as far as talk to us about, the kind of outlook is concerned for the entire IT sector, because this is the first earnings fine print that we've got, and this will set the tone for the rest of the IT firms that will be reporting their earnings following in this week as well. Let's welcome our guest for the day. Avinnash Gorakshakar joins in from ProfitMart Securities. He's the Director Research there. Welcome, Mr. Gorakshakar, and thank you so much for taking the time out. Well, first thoughts on the earnings that have come about. Are they as per your expectations?
Sakshi, I think numbers are in line with estimates. Although, I think one good part is the margins have improved from 24 to 24.5%. The dollar revenue growth has also been pretty good, 3.3%. But I think what is important is that the net profitability of the company has been below expectations. And I think the only thing which could possibly give a booster to the stock is the special dividend of 67 rupees. So, 75 rupees is the total dividend. So I think net the guidance given by the company clearly shows that there is a cautious optimism from the management side. They've clearly said that Europe, they're not certain how things could pan out in the next, say, 3 to 6 months. But US, they seem to be pretty more confident on deals happening there and the growth coming in from, sectors and companies which they cater there. So I think net, all in all, a decent performance. But I think the guarded optimism clearly points out that, we could not see a significant re-rating in the stock, at least in the near term. Maybe in the longer term, value could come in, but at least for the next couple of quarters, we could find that there could be a range-bound movement in the stock, especially at least in the near term.
So what kind of position should investors take tomorrow when the markets open?
I think, Sakshi, my guess is that, investors who already own the stock should definitely hold on. But I think fresh investment could possibly be staggered. I think there's no need to hurry and buy all, the entire quantity of TCS tomorrow itself. So I think some nimbling can be considered, but I would believe that, you could get better opportunities, in the next, say, couple of months. So I think probably a level of 3,000, 3,100 could be a good ideal, kind of entry point for investors who want to actually add to their positions.
Right. On the, deal wins, the TCS has bagged deals worth $7.5 billion in the quarter, and that's lower than the preceding 2 quarters as well. So is the slowdown easing or worsening? That's one. And how does the deal pipeline going forward from here also look? Are there any signs that the mega deals have already started to slow down?
Yeah, I think clearly Europe has been a kind of a pain point for TCS, and I think the management has admitted that Europe is a bigger challenge. As far as US is concerned, order pipeline is considered to be quite good by them, and I think order wins could come in selectively. My sense is, yeah, you're right that the order book, as of the quarter 3 is $7.8 billion, which is much less than the second quarter. So I think that clearly shows that incremental order book inflow has been little slow in this quarter. So I would believe, that, if at all we could see a further slowdown in the March quarter, that could actually make things a little more alarming. So I think we'll have to wait for the March quarter, Sakshi. And I think that is an important quarter, as far as all IT companies are concerned, because order wins and, new customers actually sign up in the early January month. So So I think that is something which I think which most of the market analysts and observers would obviously watch carefully. If there is a further slowdown, then that would confirm the trend that definitely some further slowdown can be expected in the coming quarters.
Okay, but has the slowdown been priced in already in this current level? You know, we've seen that TCS is down about 14% in the entire year 2022. You know, it's trading at about 25.5 times forward multiple, and it's down from the peak of 31, 32. What do you really have to say about the valuation currently? And, you know, can we see a further correction if the slowdown isn't priced in?
No, I think the valuations have not priced in the kind of slowdown even as of now. Although valuations have come down from 31 times to 25 times. I
Hmm.
believe that earnings growth is going to be a challenge, and I think when growth is a kind of a challenge, a multiple of 25 times also looks pretty expensive. So I would believe that we could probably have to wait for some further time to actually consider TCS at an attractive level. My
Hmm.
sense is even if the stock doesn't fall significantly, the stock is unlikely to get re-rated in the very near term because growth concerns definitely would cap the incremental upside. So I think it would be better to wait for some more time rather than immediately taking a call. My sense is that multiples could possibly come in the range of 20, 22 times, and if at
Sure.
all that happens, then I think that could be a very good entry point.
Right. Now, you talked about geographic performance, so let's focus on that. Among the major markets, North America and UK led the sales growth for the software major, rising more than 15% this time. Both these markets make for two-thirds of the entire revenue for TCS and three-fourths of its profits as well. Now remember that growth in continental Europe, that was slightly moderate at 9.7%. In the emerging markets, however, Latin America grew by about 14.6%, while Asia Pacific, Middle East, Africa, they grew by about 8.9%. What do you make of the overall geographical performance and overall demand scenario? Has that shown any sign of change, and will it take some more time before we do see stabilization right there?
Yeah, I think we could see maybe another 3 to 6 months before demand, actually stabilizes, and we could see some green shoots happening. I
Hmm.
think the clear area where most of the analysts would look at growth, to come back is the European market. As far as the Latin American market is concerned, the Asian market, the Middle East market is concerned, these are pockets where opportunity could come in. The
Hmm.
North American and the UK markets also could provide a steady kind of inflow of orders, but one cannot expect a major kind of order inflow from these markets also, because there have been some pains, and there have been some kind of signals clearly in these two markets also. So I think it's better to wait and watch. But yes, I think the Asian markets, the Middle East markets would probably provide a better kind of entry opportunity, and plus the domestic market, Sakshi, is also opening up. So probably I
Yeah.
think TCS will make consistent efforts to ensure that they bag a decent amount of domestic orders also to actually
Okay.
withstand a slowdown in other global markets.
Right. Also, when we talk about the segmental performance in terms of industries, banks, financial services, and insurance, the BFSI part, which makes up a major part of TCS's revenue, has seen 11% growth in the December quarter. The retail CPG has posted the highest growth at 19%, and life sciences and healthcare verticals have grown in at 14.4%. Even the communications and the media vertical right there have grown 13.5%. The technology and services 13.6%, and the manufacturing space 12.5%. Largely a broad-based growth, but any signs of headwinds emerging from any sector?
Yeah, I think the BFSI sector, I think, will have to be watched very carefully, because globally there are a lot of banks which have actually cut down on their on their recruitments, and
Hmm.
most importantly, banks are directly correlated to the economy. So I would believe that in the next 1 or 2 quarters, BFSI is a segment which I would be watching very closely, and if at all there is a slowdown, I would believe BFSI could probably be a little more pain point compared to manufacturing, life sciences, or the pharmaceutical, or the media, entertainment, or communication sector. So I think it's better to wait and watch. But till then, till now, I think TCS has done a commendable job. But I think the next couple of quarters are going to be very important for BFSI.
Right. Also, attrition rate, do you see that it has started to recede and has bottomed out? And can the company begin to now focus on improving the utilization rate?
Yeah, I think definitely. See, I think utilization rates would possibly get better as we go forward. But I think as far as the attrition level is concerned, I think things could get better for the March quarter and the June quarter, considering that today a lot of fresh talent is available at affordable prices. And I think Earlier the problem of high labor attrition is now a thing of the past. So I think obviously utilization levels would go up. And I think in meaningful terms, it could obviously also impact the margins because companies would obviously be able to get good talent at reasonable price.
Okay. There's also another concern that the net addition has come down as low. I mean, like it's lowest at after COVID, especially. This is the first time that it has fallen. Although there is another record that the company has posted. I'm just reading up. 1.25 lakh employees are with the company for over 10 years. That's what they have posted. On the hiring trends as well, what are the indications that you picked up?
No, I think clearly, as I mentioned to you, that as labor attrition significantly reduces, you could possibly see the number of new joinees for the company getting added, post March. And I think definitely, the company has a solid reserve position as far as employees on the bench are concerned. So I don't think this is going to be a matter of concern. I think we'll have to wait for the March quarter to come out, and thereafter we'll have to take a call as to what is the kind of new inflow of employees who have joined the company, which could give us a sense of an assessment that what is the kind of top line growth and what is the kind of business environment which the company expects in the coming year.
Okay. Will the moderation in supply constraints or supply side constraints continue to aid the movement on the upside for EBIT margins per se? There's been a 50 basis points uptick from here, but we are still much lower than the peak that TCS had seen in terms of EBIT margins, over 26% right there. Do you see any visibility this year, especially reaching towards those levels?
Yeah, I think clearly if employee costs continue to be competitive and supply of new joinees comes at a reasonable price, then I think you could possibly consider the fact that this could be an additional lever for margin improvement. But going up to 26 or about 26% EBITDA margin seems to be a little optimistic. So I would believe that the incremental upside would be a little slower. But yes, I
Okay.
think considering the kind of headwinds, the company has done pretty good job of maintaining 24.5% EBITDA margin in quarter three.
Okay. This interim dividend that you were talking about, 8 rupees per share and special dividend of 67 makes it 75. Your thoughts on whether this could at least cheer the stock in the short term?
Yeah, I think Sakshi, these are short-term gimmicks, which the management obviously has used to ensure that the overall mood and sentiment for the stock continues to be positive. And rarely does the management actually give out a straight view. I mean, they don't give guidance, they don't give
Yeah.
assessment on what kind of growth outlook the company is going to achieve. So my sense is yes, it could be a short-term trigger, but TCS is a cash compounding machine, so giving out such kind of dividends is now considered to be a normal from the company. So this is unlikely to relate the stock quite significantly. It could obviously boost up the sentiment for a few days, but longer term it's going to be earnings and growth.
Absolutely. Also, the biggest disappointment for you in this earnings and the biggest plus point, and going forward from here into the next few quarters as well, what do you really anticipate? Are we going to see more on the upside than downside?
Yeah, I think it all depends on the fact that what are the kind of headwinds which are going to emerge from Europe, and how quickly and how strongly the company bounces back in terms of fresh order inflows and in terms of bagging new customers. I think the markets would obviously look at these data points very closely, and obviously, if at all they're able to maintain their EBITDA margins, I think the growth in terms of revenue and the operating margins are two key levers which the market will observe very closely, and obviously new deal wins. Europe is definitely a big pain point. So I think markets should obviously look at the fact that whether Europe bounces back or whether Europe goes from bad to worse. I mean, these would be the points to consider. And I think at least in the very near term, Sakshi, I am not looking at some sort of a significant re-rating in TCS. It would take some more time before we see a revival in obviously the fortunes of most of the IT majors. Numbers are not bad, but definitely they're not as great as what everybody expects.
Right. Last question to you, Mr. Gorakshakar. TCS stock got listed on August 25 of 2004 at a premium of about 26, 27 odd percent to the issue price of 850. Now, over these last 10 years, we've seen not 100, 200, but over 400% kind of returns. So, the investors have definitely made money, and that's excluding the dividends. Currently, the TCS stock is down about 20% from the 52-week high levels, just like how we pointed out. But what's next for this multi-bagger stock? over the long-term perspective, 5-10 years from here on, for all those investors looking at that far, to have this stock in their portfolio, what would you say?
Yeah, I think one thing is very clear, Sakshi, that without technology today, no global economy can function. And today, technology has made inroads into many growth-oriented sectors, especially on the digital side. So I would believe that this company has made a buyback at 4,500. Now it is available at 32, 3,300. If investors have a 2 to 3 year kind of viewpoint, then I think they could definitely nimble into this stock for the longer term. Because I think going forward, this is a cash compounding machine, a very low asset, kind of model business, which will obviously propel them to do better once the global headwinds actually subside. And I think that is bound to happen. We only need to give it some more time.
Absolutely. Well, thank you so much, Mr. Gorakshakar, for being with us and breaking down and decoding the earnings fine print for all our viewers for TCS. Mostly a decent set and a modest set of numbers, slight miss on the profitability front. But the dividend, like Mr. Gorakshakar really pointed out, could only be a very short-term gimmick, but not a long-term story. We'll have to look at how the headwinds emerge from the macroeconomic point of view, geographically as well. Europe seems to be a little bit kind of a concern, but largely the management commentary is still positive, and they do believe that beyond the current uncertainties, the long-term growth story still remains. So we'll just wait and watch out for as to how the stock really opens up tomorrow as well. But from the longer term perspective, then definitely this could be a stock that you could worth have, in your core portfolio for a long time. Many thanks, Mr. Gorakshakar, for being with us on this special edition, and we'll keep you posted with everything that's really making news and headlines in the world of business and stock market. So do stay tuned on to with us on Business Today TV. Don't forget to subscribe to this channel and also stick with us via our other social media platforms, Facebook, Twitter, LinkedIn and Instagram. Many thanks for joining in.